70%. That's the amount of traders that are not profitable. And that's the amount of people I need to hit the subscribe button. One of the steps of being a profitable trader is having a strategy that actually works, not just buying every support, selling at every resistance. Let me show you a strategy that actually works that I use, and make sure you stay to the end to see the results. I want to show my approach to taking a trade. So first things first, when I come on the chart, Jump 10. In case you don't know, my nickname is Jump King, and the reason for that is because I only trade jump series on derive. So coming into a trade, first things first, I look for a key area. So a key area will be something like this, and I'm going to assume I'm talking to beginners. A key area is also an area that you can consider point of interest. Point of interest meaning that what happened when the market got to a certain space. Like what happened? Like did something happen? Usually when markets move, it moves and break through support and resistance. I'm assuming you know this already. So a key area will be what happens when market gets to a certain point. So as it is on the chart, you see the key area there. I drew the line. Last time price got here, came down, and then made this massive drop. So I just got distracted. So it needs massive drop, and now it has come up back to that key area. So after selecting out my key area, I think I should write that down somewhere. And mark your key area. Usually I don't draw a line that goes across my key area. I only just mark it in my brain, so I don't usually need to do that. And if I'm marking my key area, I usually mark it around the 4-hour time frame, or maybe at least 1 hour time frame, depending on how the reaction is like. After marking my key area, the next thing I do is look for a 1, 2, 3 move. And I'm going to show you what that means. A 1, 2, 3 move. This is what I call a 1, 2, 3 move. So this is my key area. A 1, 2, 3 move will be 1, 2. So the next thing I do is look for a 1, 2, 3 move. Look for a 1, 2, 3 move. 1, 2, 3 move. The next thing I do is look for a 1, 2, 3 move. And which is this? You can see it came. I mean, this is live actually. Synthetic indices is always live. So I literally just came on the app like a few minutes before I started the stream, and I didn't really even pay attention to the chart. I just felt like I'm just gonna, if I don't see an opportunity, I'll just explain what I look for. But fortunately for me, I see everything is forming well. So I look for a 1, 2, 3 move, which is something like this. So now after looking for the 1, 2, 3 move, the next thing I do is mark my previous resistance or support. So mark previous resistance or support. Hold on, let me check something. Yes. So mark my previous resistance or support. And so now what that would look like is, since it got to this key area, since price got to this, let me just delete this thing and use the actual chart. Since price got to this key area, it has done this 1, 2, 1, 3 move. Let me write it, just for the sake of you being able to see it. 1, 2, 1, 2, and 3 move. Since I've done this 1, 2, and 3 move, the next thing I want is for it to mark previous resistance and support area. So I just mark it. Let's do this like this. So this was the previous. So this is a previous resistance and support area. As you can see, on here it was a support where C price came, made a move, came back, still made a small move, but almost over the previous move, and then broke it. Now, once it breaks through the support now turns into a resistance. So now, the next thing I usually do, and I'm not going to write this down because it's based on my discretion, but I use it most often at times and not. It's using my Fibonacci. And then, as you can see, price, the previous support or the resistance level is around the 50 to 60%, which is usually what's considered the golden zone amongst traders. I'm not sure if that's what's considered the golden zone, but amongst a lot of traders, there's what is generally known amongst traders to be the golden zone, and I believe it's usually the 50 to 61.8%. So oftentimes and not, when price gets to that point, he usually always does something. So I mean, nothing is 100% in trading, but usually, oftentimes and not, trading is probabilities. So more oftentimes than not, I hope you understand that statement. More oftentimes than not, price reacts. So as you can see, price is going there. You see this. Let me zoom in so you can see. Look at this candle. It's definitely heading here. So what I want to do now is set my, what do you call it? Sell order. Just set my order, please. I might be mistaken on what's called, but just set my order. This is what I would typically go for. I'm going to explain my thinking behind how I place my sell order. So usually, traditional way of trading, or more conservative, thank you, that's the word. Conservative way of trading. People who trade conservatively, that's people who are not keen to taking like serious risk, that they are making sure everything that they need for a trade, every requirement for a trade. People who make sure that every requirement for a trade is met before they get into a trade. Those are like conservative traders. So conservatively, if you're trading, you would want to wait for the price to get into this resistance level. And conservative traders will usually wait for when price gets there and then react to start coming down, and then they place their trade a bit below where their level was, their support or resistance level was. So that's what a conservative trader would do. So me, I kind of like infused what a conservative trader would do plus what an aggressive trader would do. An aggressive trader would just wait for the thing to just get to the support level or resistance level and just place the trade. I mean, it sounds like a gamble, but for them, what it does is that it helps them get the most out of the trade. So for a conservative trader might be looking like 2-1 or 3-1, but an aggressive trader is looking from 5-1 and 6-1 thereabout. So I usually go for a 4-1. That's what I go for. So I kind of like have a conservative trading mindset, because if you're starting trading, you're going to definitely learn how to be more conservative. Then the more you understand, it depends on how aggressive they become. People just become conservative and stay like that throughout. People learn conservatively and then become aggressive. So I kind of like infuse both of them. So what I do is that if I'm ever going to place an order, and you still have a lot of time for that, what I do is I measure where a conservative person will place his order. And they hardly place order. Let me just say this. This is a segue. Conservative people hardly place order. What they do is that they set a timing, an alert. So when price gets to here, that's all. They set the alert and then they come on the chart, and then they monitor it, and then they make their decision. So for somebody who doesn't have time to be looking at chart, or who doesn't have subscription for an alert, you would want to place an order. So what I usually do to place an order would be I mark where a conservative places order, and conservative trader places order, and then I adjusting audio, stop levels, and then take profit. Understand? And then what I do is I raise a line from here. So half of what my support or resistance level is. So around here. So the measurement I have for my support levels remains the same, but just taking up. So I would basically be using what a conservative trader would use for a support and some stop loss and take profit, but I'll be placing it like far above where they would usually enter from. So if you see, it's kind of, the technique is kind of like a mixture of what a conservative trader would do and a aggressive trader would do. So I'll place my entry around here, and I'll just target a simple 4 to 1, and then yeah. So let me leave this as place order. The next thing I'll write is place order or place order or monitor trade. Yeah, monitor trade. So basically that's it. That's textbook definition of how I trade. Before I used to do all those trend line things, but then going further into this trading of a thing, you understand that some things don't really matter. You see them with your eyes, not that it doesn't matter. The more you familiarize yourself with trading, the more you see that some of these things you can see it with your eyes. So for example, this is my resistance level. I knew before even joining the flipping action, I knew it was around, wow, that was a big jump. I knew it was around the 50 to 60%. And then let's move on to the next chart. And then if by the grace of God anybody is watching this thing and you have small money identified, small money, please don't risk everything you can risk in your life. Just monitor this trade with me and let's see how it goes. I have a 60% chance it's going to be successful because this textbook setup right here. Textbook. That's what they call it, textbook. So let's move on to the next chart. Jump series has 5 series. Let me just show you. So I'm going to be stressing my brain. 50, not 55. 10, 25, 50, 75, and 100. Keep your mind back on 10 because we're going to go back here. Okay, so like I said, first things first, go to the higher time frame, mark your key area, mark your key level as the case may be. So in this case, this will be quite tricky because the key level we're looking at is around here. Significant key level. Don't just mark any key level, mark a key level where a major move happened. I didn't say this, forgive me, but hopefully you watched to this point. The key level is significant move happen, like she started here and move, or started here and move. So a significant level will be here. So this is quite tricky because there is nowhere for me to enter. I can force an entry, which is very, very bad as a trader. You always do not want to force an entry. You guys should we'll just monitor the trade together. Occasionally we'll just go back and forth just to see what is happening. Let's see where it has gotten to. Bingo. See? This area I'm waiting for, still far off. So let's continue. I don't know, I should have timed myself. I don't want this stream to be crazy long. But yeah, let's keep going. So, like I said, there's no reasonable area to enter. I can force a trade, but forcing a trade would be a very, very, very unwise move to make. As a trader, I should never force a trade. Once you have your trading strategy or trading plan, as the case may be, you just be patient. There's sometimes you can go, because of the kind of trader I am, I can go like weeks without seeing a setup. Because most of my trade setups are usually around 1 hour, like the previous series jump 10. It's on the 1 hour. Most of them are usually 1 hour, so I can't always get a 1 hour trade every day. So most often times are not. It's happening once a week. Sometimes it doesn't happen in a week. So if you're trading 5 series, even while trading 5 series, you might not get a trade throughout the week. So I'm even quite it's been quite lucky for me actually that I got a trade when I decided to just hop on this live stream. I got a trade and looking at deciding to open the live stream. So there was an 5 index, and the next one will be 50. Let me clear anything I had previously. 4 hours. First things first, look for key significant level. And as it would seem, the last time anything like that happened was last year, September 25. I'm still going back. My chart doesn't want to reload. So let me ignore. Let me use the 24 hours. That's still crazy. It doesn't want to load back. So I don't think it has even happened that price got to this level in a while in this series. So it has just been on a massive, massive uptrend. I don't even know I'm going to call it a trend because it's not a trend. It's just going on a massive up explosion. Crazy. So nothing yet to trade. Jump 75. Jump 75, and we are looking at a key significant level on 4 hours. So what's the key significant level? Well, I mean, this will be the most obvious one. This will be the most obvious one. But another obvious one could be here. Could be here. Because if you look from here, it came here, and then after it broke past it, it came to it again and continued to move down. So at this point, I can say price is just ranging or consolidating as it would seem, because there's no direction as to where the market wants to go. So it's going to be risky to say you want to trade. I mean, you can try and force a trade on top of that resistance level, but I don't trade consolidations. There was a time I came up with a strategy, but strategy wasn't giving any good results. So I don't trade consolidation. There are some people who know how to trade consolidations very well. I'm not among that set. And the last one, jump 100. Textbook. Let's see what can you give us? What can you give us? And you're giving us nothing. Why am I not surprised? If price can come to here, no. I think where price looks okay. It's not attractive. If price can come here again, if price can come to this white line, I'm sure something will happen. Something nice will happen. But what this looks like, if you read a lot of chart patterns, what looks like that is happening now is a head and shoulder pattern. I don't trade head and shoulder patterns, and I don't force trade on head and shoulder patterns. So it's gonna need to come here and be like this. I believe this is an head and shoulder. Yeah, ignore what I'm saying, but I think this is an head and shoulder pattern. I don't use this for anything. So we've gone through all the charts and I've seen that you only have an opportunity on jump 10. I'm gonna go over the trend and see what it's like now. Yeah, this is it. As we can all see, PP was successfully smashed. And this is a trade that I literally just came on live and just showed my one out of maybe 2 or 3 trading strategies. This is my main one, trading strategy.